everyone. Nice to see some familiar faces in the crowd. My name's Anthony Chow. I'm a co-founder with Jim Mellon of Agronomics, which is a London-listed investment company focused exclusively on the field of cellular agriculture. Cellular agriculture is the production of most things which we've historically derived from animals, but applying biotechnology in order to produce these much more efficiently. We have a market cap of around £100 million. We've got cash of about £22 million, so a very solid balance sheet. We have a portfolio of more than 20 companies covering major protein categories and fat categories. And this is a sector which is supported by the confluence of a number of major secular trends, which I will talk about in a minute. So there are three key verticals which we focused on. I know some of you are familiar with this, but just very quickly, we have the cultivated meat companies and seafood. This is where you take a sample of cells from an animal, you isolate the stem cells, you grow them in a bioreactor, and then you end up with a biomass of stem cells. These stem cells need to be differentiated into muscle and fat cells, the primary constituents of meat and seafood, and then you merge those in the relevant ratio for the product that you want. This is a very exciting technology. The first approvals have now been received in Singapore, but probably more importantly, the US. And we're expecting a number of approvals, further approvals in the next 12 months. Precision fermentation, this is similar but slightly different. This is where you use a microorganism as a factory to produce a specific type of protein. The largest applications are for dairy proteins, egg proteins, and palm oil. And this is a very well-established technology, first commercialized back in the late 70s. A company called Genentech modified yeast in order to produce insulin for type 2 diabetics. And that has been, is now responsible for the production of essentially 100% of all insulin. But what has happened over the course of the last few decades is the cost of genetically modifying those organisms has come down by several orders of magnitude. So this technology can now be applied, successfully applied, to the production of relatively low value proteins, but those that are required in absolutely vast quantities. And then finally, the enabling technologies, which I'll also talk a little bit more about. The theme that Agronomics really plays to, it's everything around sustainability. We simply cannot feed today's population with current consumption patterns and production methods. And as far as we can identify, this is the only technology that has the potential to increase food production while at the same time decrease the resources that are required to produce it. And if we go through a couple of the statistics around how intensive animal agriculture is, you'll see why we need this technology so badly. Animal husbandry is responsible for something in the order of 18 to 25% of all greenhouse gas emissions. That's more than all forms of transport combined. 50% of all fresh water which is used by humans goes into animal husbandry. That includes the water that waters the crops that then get fed to the animals. And 70% of all crops which we grow are not for direct human consumption. They get fed to animals in intensive animal agriculture in a very inefficient cycle where you convert calories of feed to calories of flesh. And a cow, for example, needs 25 calories of feed to get just 1 calorie of flesh. Cellular agriculture offers the potential to improve that by 1 order of magnitude. So you can see that animals are just very, very inefficient converters of these of feed. We've got massive concerns, increasing concerns around the use of animals to produce our protein. Animal welfare is absolutely horrendous for 2 trillion fish, 80 billion chickens. And using animals in this way also acts as a potential reservoir for zoonotic disease. We've all experienced that. But this technology, we really believe, is going to be adopted by companies and governments worldwide because of the potential to improve supply chain resilience and address food security. Here are the credentials of cultivated meat versus conventional meat and the plant-based alternatives. Although the plant-based companies do have substantially improved environmental credentials compared to conventional proteins, they are struggling, and I'll talk about that shortly. These are some of the largest addressable markets that we can get our hands on. Few trillion dollars in total. Meat, 1.1 trillion. Dairy, 900 billion. So absolutely huge markets that are ripe for disruption, that haven't been disrupted for a very, very long time. And here is a selection of some of the products that both Jim and I have had the opportunity to taste over the course of the last few years since we started Agronomics. The bluefin tuna, the pork, the dairy proteins, egg proteins, all very, very exciting. Now, Agronomics' share price has had a pretty challenging time over the last couple of years, and there have been a number of reasons why this is the case, and I'm going to try and address some of these head on. Obviously, we've had a global macro shock. We've seen interest rates rise at a pace that has been unprecedented in history, and this has caused investors to focus on assets that are producing cash flow today and not those that are long dated in the future. In addition to that global macro shock, this sector has suffered from a couple of other headwinds, and this one is very much front of mind. The plant-based alternative proteins, such as Beyond Meat and the Impossible Burger, which were the stalwarts of the industry, they really raised the profile of the entire sector and highlighted how bad animal husbandry is for the natural environment. They have failed to deliver for the consumer. There are three reasons that consumers, for the most part, make food purchasing decisions. It's price, taste, and convenience. They did not meet the pricing levels that are required in order for mass adoption, and the sensory profile did not replicate sufficiently that of conventional meat, and you have seen their sales have completely stagnated and have suffered massive value destruction. Both Oatly and Beyond Meat had market caps above $14 billion, and today they are below $1 billion. And investors have read across from the plant-based alternatives to the precision fermentation and cultivated meat products, and are concerned that they are going to suffer the same fate that the plant-based companies have. Now, I believe that we have a little bit more credibility when it comes to this next statement. The cultivated meat and precision fermentation products are good enough to generate repeat purchases. This is something that the plant-based products have not been able to do, and we have credibility because we did not buy into that plant-based hype cycle. We thought it was a hype cycle, we were spot on, and we believe that this is not going to be the case for our portfolio companies' products because they are that good. They taste exactly like the real thing. When you try the products, it is somewhat deflating in the sense that it is just a pork sausage. It is just a chicken fillet. It is not different to anything that you will have tried historically. Now, in addition to the challenges that the plant-based, or the read across from the plant-based companies, we have suffered what appears on face value to be a barrage of negative news, negative headlines around cultivated meat. The New York Times, Wired Magazine, and Bloomberg all put out very, very negative headlines around cultivated meat. I will concede that the reporting around those is not entirely factually incorrect. It was definitely done with a negative slant. But from all three of those publications, it was written by one journalist and one journalist only. He clearly has it in for this industry, and although there was some time in between the articles that were written, they all there was very limited new information from any of the articles, and the really negative attention was directed at just two companies in the field, or maybe three. And the reason that those companies attracted such negative attention is because they were the tall poppies of the field. They had raised hundreds of millions of dollars. One in particular, a company called Good Meat. This was an open secret that this company was no good. The CEO of that company has had a questionable background. He was very good at raising money, very good at delivering a blue sky view of what cultivated meat could deliver. But that has come back to hurt him, and that has unfortunately read across to the entire sector, which is not justified at all. But what those negative headlines mask is a very slow and steady positive news flow coming out from individual companies, coming out from governments that are continuing to, and increasingly so, putting money into these companies. Agronomics made its first investment in 2018. There was only 20 companies, only $50 million had gone into this sector. Today, that is $7 billion and a universe of 500 companies. There wasn't a single regulatory pathway where these products could be approved. They're now approved in a number of jurisdictions, and these products are being commercialized in those jurisdictions. Here is the sort of the first wave of companies that have received regulatory approval. Solar Foods, these are two companies in the portfolio, and I'm pleased to be able to tell you that 2024 is the year that we, Agronomics, not just the sector as a whole, are going to see multiple product approvals of a number of different products. We're going to see Blue Nalu about midway through the year get its bluefin tuna approved, Meatable get its pork products approved, Onago its egg products, Clean Food Group over there, stand over there, hopefully you can go and visit them. Their palm oil products are going to be commercialized in the UK, and the list goes on. So there is very positive news coming, aside from additional fundraisers that are going to happen from within the portfolio. Now, in addition to the headwinds that the sector has faced, Agronomics shares, unfortunately, have not performed very well, but it is worth pointing out that we are sort of facing very significant headwinds. Unfortunately, many investment trusts, Jim mentioned in his speech today, are trading at very substantial discounts, and our peer group is not immune to that at all. Agronomics is doing okay. It doesn't make it any more comfortable, but we do believe there is a lot of intrinsic value in the portfolio that is not being recognized in these numbers, and hopefully we will see better times ahead when risk sentiment changes. I mentioned already that we've got a pretty strong balance sheet, 22 million pounds of cash. This is the spread. You can see that we've got a nice spread allocation across cell culture and precision fermentation, and the infrastructure opportunity is one that I would like to talk about. But before I get to that, Meatable, our pork company based in the Netherlands, it raised 30 million euros in August of last year. That is the second largest raise in cultivated meat in 18 months. That is an achievement. That is an awful lot of money. We're very excited by them. Regulatory approval later this year. Blue Nalu, $33.5 million. Neom, which is the very ambitious Saudi city, they put $20 million in out of a $33.5 million round. That is a huge amount of money in the current environment, and both of those fundraisers speak to the strength of the companies that we have in our portfolio, and we are very much looking forward to seeing Blue Nalu not just get its products approved, but start producing in meaningful quantities in the relatively near future. Now, Liberation Labs is a company that I would like to talk about because in terms of cash flow generation, this is the company that is nearest in Agronomics' portfolio to producing what are very significant amounts of cash in an absolute sense, but also for Agronomics' portfolio. All our precision fermentation companies, even when they get their products approved in the US, there is very limited capacity for them to be able to produce the protein that they're going after. Liberation Labs is a technology agnostic play, a picks and shovels play into the massive flow of capital that is going to need to go into the infrastructure that will facilitate the broad-based adoption of precision fermentation proteins. It's building a 600,000 liter facility in Indiana, $115 million US, and will generate $25 million of free cash flow come the 1st of January 2025 when that is commissioned. It is inconceivable that we will not find more than sufficient users of this facility because there is no capacity in the US to be spoken of. This is a 3D rendering of what the facility will look like, but I really want to highlight we are approximately halfway through the construction of this facility. This is not a concept. That is what the site looks like now. Concrete has gone down. The long lead time equipment was ordered over a year ago. It is being delivered. These are the very large fermentation tanks, and it's very exciting to see that come together. We believe that this is going to be the first major success story in the entire field. So please try to ignore the noise and observe the genuine progress that has been made in this sector. This is the year for regulatory approvals, and nothing has changed in the desperate need to adopt these products from a sustainability perspective, from an animal welfare perspective, food security perspective, and we still believe that we are at the beginning of a multi-decade, multi-trillion-dollar run of capital that is going to support this sector for many years to come. Thank you.